We've talked about the Fed. We've talked about inflation. The Fed has said they're going to tighten because of the inflation you've been warning about for some time. We actually get a decision next week. What do you expect the Fed to do?
I think they're going to be signaling that a tightening in March. I hope they'll be signaling as rapid as possible an end to QT. We got an economy that's looking like it's above the speed limit and it's going to have to slow down. And the Fed's got a very delicate operation now in slowing it down. The delicacy of that operation is underscored by the turbulence in asset markets since the beginning of the year. It's underscored by the softness in some kinds of measures of consumer sentiment and consumer spending. But if we're going to have maximum employment and maximum growth over time, we're going to have to control the pace of the growth of total incomes so that more of it can go into more employment and more output and less of it into inflation.
Larry, as you look at the various indicators, are you concerned at all that maybe we're too complacent about the Fed's ability to do this? The markets, you should say, have been turbulent. They're reacting. At the same time, you look at the 5 years, they're still at like 2.12%, something like that. And also, the financial conditions have not really tightened much. Is that because we're just so confident the Fed can do this without really roiling people, or are we underestimating the size of the problem?
I think the gravity of our situation is still understated. While the term transitory has left the policymaker discourse, the idea of transitory inflation is still very fixed in their minds. There's still a belief that with very limited monetary actions that have not taken full effect, we will see inflation slow to the 2% range by the end of the year. That certainly could happen, but it wouldn't be my bet, given the tremendous tightness of labor markets, given increasing signs that China is going to be a source of bottlenecks for quite some time to come, given increasing concerns about oil prices, given that there's a lot of housing inflation that still has to feed through the system, and given how remarkably low real interest rates are, I don't think that it's the best bet that inflation is going to be coming down to into the 2% range or the twos by the end of the year. And so I think complacency is not appropriate. And I think the evidence is that inflation's at rates lower than 7% don't exit the system without very substantial economic turbulence. So no one's pulling harder for the Fed to strike this balance and get it right than me, but I think it's not going to be an easy one.
So, Larry, President Biden had a quite long, almost 2-hour press conference this week. And in the course of that, he basically said it is the Fed's responsibility to do with inflation. He talked about the economy. What did you make of what President Biden had to say about his leadership of the economy?
Look, I think President Biden is right to take pride in the fact that more people are employed than anyone would have expected on the day he took office, despite very substantial disease threats. Frankly, I can't understand for the life of me why the administration is so obsessed with meatpacking. Meatpacking is an entirely trivial and unimportant issue with respect to inflation. It is inconceivable that tossing $1 billion, as the Agriculture Department is, in the general direction of creating an extra meatpacking plant is a good use of taxpayers' money or is going to happen. So I don't understand why the President of the United States keeps talking about that. I'm glad to see him recognize and emphasize the independence of the central bank. And as I said on your show last week, David, I very much hope that his new appointees to the Fed, when they have their confirmation hearings, will take the opportunity to underscore their recognition that the most basic responsibility that the central bank has is a stable currency and price stability and the avoidance of inflation. That's not something that's been in any of their writings prior to this point.
So, Larry, when you talk about meatpacking, I naturally think about competition policy and antitrust law. You have something of a dispute, perhaps going with Paul Krugman, your former classmate, your friend, over the role of antitrust. And we've heard from President Biden and others that really antitrust enforcement is a key ingredient in fighting inflation. How big a difference do you really have on this subject?
Should we have substantially enhanced antitrust in the United States? Yes, we absolutely should. Is it harmless and normal politics to take advantage of concern about high prices to drive political energy behind that competition policy? Yes. Does it make sense to suggest that antitrust policy can in any important way reduce the inflation rate over a horizon of a couple of years? No. That is not supported by economic science. I'm also worried about the antitrust doctrines that some of the Biden appointees have put forward. Lena Khan expressed a concern that perhaps when two firms merge and they're able to produce more efficiently with fewer people, that should not be counted as an efficiency. There's been a lot of talk about introducing considerations other than lower prices for consumers into antitrust, protecting small business competitors, for example. That kind of stuff is, frankly, promoting of higher prices and works in the wrong direction with respect to inflation. Right. The most important thing we can do with respect to competition policy is accept lower priced goods from abroad. And resistance to protectionism, active trade policy, those aren't things we hear about from the administration. So, yes, I am all for competition policy. Yes, I think antitrust in our country has lagged, but it needs to be based on lower consumer prices.
Larry, an important development this week, potentially important, I believe, is the paper that came out of the Federal Reserve about a central bank digital currency, the possibility of that seeking comment over a 120-day period, laying out some of the possible advantages and some of the possible risks. How important do you think this development could be?
Potentially, it could be seismic. I was glad to see what I judge to be a thoughtful, cautious approach by the Federal Reserve. I think the right way to think about this is in terms of what will give us the most efficient payment system and what will be most enabling of an economy that works for businesses and works above all for consumers. There's been a certain amount of hysteria that because China is going to have a digital currency, we have to have a digital currency in order to protect the role of the dollar and that kind of stuff. I was glad to see the Fed stay away from the hysteria about the role of the dollar and to be approaching the question in a deliberative and thoughtful way.
Larry, let me sneak in one more, if I could here, please. A couple of weeks ago, we had an outrage of the week from you about the patterns of investment from some of our public officials, whether at the Federal Reserve Board or up on Capitol Hill. We now have perhaps a development where the Speaker of the House, Nancy Pelosi, apparently has backed off of her resistance to a broad ban on that. What do you think should happen?
I was glad to see it. I think we need to scale any suggestion of impropriety by public officials out of our system. That means not trading in individual stocks. That also means not hearing something and calling your broker to do anything, even selling mutual funds and the like. People should be able to adjust their financial positions, but only well in advance so that there's a reassurance that insider information is not coming into it. And there should be rigorous rules in both the executive branch, the Federal Reserve, and the Congress, and I think it's an area where it's appropriate for confidence to look at things.